Hey, everybody, welcome to the Storage Investors Show. My guest today started Whitelabel Storage. They do third party storage management, remote management for owners and operators out there in the self storage space. Alex Hartman and Peter Smythe, the co founders of Whitelabel Storage. We're going to get into their story and really get some advice from them on how you can operate your facility remotely, give you some tips and tricks, and then find out what services they offer because you might need a little help along the way. But Alex and Peter, welcome to the show.
Thanks for having Happy to be here.
All right, guys, get us like I usually don't do this, but because it's kind of like a startup thing, and you guys have gone from like a rocket ship, right? You've gone from zero to like 90 plus stores, thousands of square feet in self storage under management. You started in New York City with kind of a different background. Talk about that real quick, guys and gals. If you're listening, hang around. We'll get to some tips and tricks and advice for you guys. But I kind of want to get into the story a little bit about how White Label Store. I can't talk. How White Label Storage started. So give us a background on where you started and what got you to where you are today.
Sure. So we were business school classmates at Harvard. We had this concept where we wanted to convert unused space in urban areas into small local storage facilities. The typical urban consumer or dweller is kind of not served by a traditional self-storage product unless there's a legacy asset. I mean, for a number of reasons, there are not self-storage facilities in the highest density and highest income parts of cities. So you're either forced to do a drop-off and delivery product, which is not super convenient if you need something in real time, like scheduling to have the Verizon guy come. There was a product called Clutter and Make Space. They're still floating
Yeah, I was
around.
going to say, yeah, Clutter was a big one. I remember they did a big push back in the day. I would see them at the conferences, walking around and all that. So they folded, right? I think they sold or something happened.
Yeah, they got bought by Iron Mountain in out of bankruptcy or not a happy acquisition. I mean, is it?
That's right.
Yeah,
Yeah.
that was we
No,
don't know those guys. We don't know their business other than that. That is way more. That's a logistics business, right? It's a pickup and delivery.
it's completely different. Yeah. I mean, to be honest, I criticized them before because they were, trying to disrupt self-storage and telling this big story about how, so on and so forth. And I said, there's no way. This doesn't make any sense. Outside of larger cities, it's not self-storage like you would think. It's a whole different business. But anyway, I'm not criticizing the people who started it. You got to have vision, a little bit of grit, determination, raising capital. Those are all difficult things to do. So I respect what they did. I just didn't think the business plan had much legs, and so it turned out that way. But go ahead.
Yeah, and that, by the way, they were huge. Like maybe they just needed massive scale, and with being with Iron Mountain, it'll work.
They did, but the problem is, like, when rents get down for a 10 by 10 like they are now, they would have folded anyway. Because like here in Mooresville, I live in Charlotte, North Carolina, for example. I don't know what it is right now, but just a few months ago, there's this extra space storage giving away 10 by 10s in a climate controlled building for less than $20 a month.
Yeah, it's
You
tough.
cannot compete with
That's
that.
tough. Yeah,
That's not possible. So as far as if you're running a clutter type business, and
that's
it's
right.
even hard for self storage operators to compete with that. So it just when rents are high, they would work, in New York City or whatever. That makes sense. But anyway,
Yeah.
so continue on.
No, but it's a good segue. So, I mean, we looked at the market. We said, well, I mean, what is the product that's sort of missing here? And it actually sort of exists. Buildings have most apartment buildings or condo buildings, or many of them have in building storage, and that stuff tends to either sell out in condos. They sell it like it's an actual purchase. It comes to the condo. In many places, they rent it. Our idea was, all right, let's build this product for all the buildings and residents who do not have a local product. And what that led us, over a course of 2 to 3 years, we scaled it to over 40 stores. And one of the things we needed to do while we were building that business was find a way to service and manage a decentralized sort of network of small stores. You couldn't individually staff each store. So we sort of, from first principles, needed to come up with a playbook that involved a combination of technology and service and people to run that business. And as a result, we sort of a couple of years later looked at ourselves and said, "Oh man, I mean, now you could run the same playbook that we'd put together for small or remote, for non-traditional or non-institutional self-storage facilities, under a certain size."
Now, did you get inspired by kind of looking out in the landscape of who else is out there kind of running remote facilities? For example, like a 10 Federal or previously like a Jefferson Shreve who
Yeah.
with Storage Express and a few other guys. Like, is that what helped you kind of see that, hey, there's potential here?
Yes and no, because those groups that you just mentioned, they typically are they're owner operators as far as I understand. So the amount of sort of the number of facilities they need to manage for it to be a good business if you're owning is sort of drastically different than if you're managing, right? Um, so there was a note out there that sort of proved like it can be done. Some groups have had success managing remotely. And we had some of our own success too. Uh, there was enough proof, but there hasn't been an organization that has, I would say truly scaled and hit scale in the sort of remote management world, the sub-institutional assets. So we both then saw like that market opportunity, but also because there's not this scaled organization doing it, it left, there's a lot of self-storage owners who need that sort of help. One other point to make there are groups with large portfolios that are managing them remotely, but there's not a dedicated third party provider there that's doing more than a couple hundred dollars. And that's because once you're an owner, that's where you have LPs, you're a fiduciary, and you're just going to make more money as an owner than you are as a manager. So we already were building a services business, and it expanded our market opportunity and we looked around and said, look, there's just nobody's trying to serve this market. Everybody either wants to be pure software or an owner. And there's not a lot of players that are either not trying to, many folks are trying to use property management as sort of a lead generation tool to find new deals because you got the best luck at something that might go to sale. That's how Extra Space scaled for a long time successfully. Or you've just got folks that have built it because 10 Federal's example, they're an owner. Now they manage for other people as well, but that's not their sole focus. They have competing priorities. And again, they're a great, great business. And now they've got other businesses in Da Vinci, or at least the founders do. But this was our differentiating factor as a sole service provider.
Yeah, there is copper storage solutions. They launched, we used them back in 2021 and before we came along. I think they had like 40 locations or something like
Yeah.
that. It wasn't as many as they had now. And they were completely remote management at that time.
But Bob
10
Cott,
Federal.
those guys have owned,
Go ahead.
right? They're an owner as well.
They own their own, but they did offer, and they do offer third party management. I think they've gone to a hybrid model with the remote versus, because they were just remote before. Don't quote me on that, but I think
Yeah,
they're at a hybrid point now.
we
And
see them
then
a
10
bit. Yeah,
Federal. Yeah, they're, great guys. And then 10 Federal, we did offer, I worked there, so we did offer sole third party, but you're saying there's no third party remote management operator out there who just is trying to operate
yep,
and
that's right.
not trying to purchase. So you're not trying to purchase any facilities right now?
No, we're not, and that's
Okay,
that's
got
like
it.
that. I think that helps. We do have a lot of owners that we're talking to that sort of ask us, "Hey, am I going to be competing with you at some point? Are we going to be
Hmm.
trying to buy the same assets?" We we think it's an advantage for us and it forces us to provide a better service because we're just solely focused on delivering the best product and creating value.
Do you think you'd ever pivot at some point? And that's okay, like, because sometimes you have a business plan and you realize, hey, this is going great, but we can add this, or hey, this isn't going so great, we should pivot and do this, or hey, we should add on this other line of business at some point. Do you think you ever would want to, like, own?
I don't want to rule it out or say we would never maybe independently buy an asset or anything like that. Right now, with where we're at as a company, like in order to become, we want to be the best remote manager by far in the industry. In order to do that, there's still just a tremendous amount of wood that chops to get there, right? So like if we then said, hey, let's split our time between figuring out how to be better managers and let's raise a fund, roll up an acquisitions team, and maybe, do not sort of just become investors and owners. At a minimum, our attention is diverted. And now I think then our sort of current goal of being the best managers possible, that is harder to achieve, to the extent our focus is split. Um,
Yeah. At some point, it might make sense. Like you said, you probably would bring a team together and, all that stuff and give them a mandate to go and purchase because it does make sense to have that at some point in the future. And it's okay.
Chris,
No,
are you
yeah.
committing to seed us with the capital, or are you just an anchor investor?
Exactly.
Yeah.
It makes a ton of sense. You guys are based out of New York, right?
We,
Yeah. So, dude, I mean, yeah,
and then
that
owning's great. It just us owning does not help us help our clients at the moment.
no, I get that.
Maybe
Yeah,
that
that
will
makes
change
sense.
in the
Yeah.
future. And then even now, like one of the sort of, nice things we can offer. mm, Sometimes we're working with just mom and pop operators. They've owned one store. They'll only ever own one store. But then we're seeing increasingly, we're called smaller investors who are trying to, slowly scale up. They have LPs. So they're, you know, entering and exiting the
Yeah.
facilities that they own. So we can help our owners and make these connections too. We know people who are selling, we know people who are buying. We're trying to build a little bit of that network. A little bit harder too to do that if we're sort of, taking first look and then passing on things we don't want and so on.
Yeah. No, I understand. It's a dual man. It would be a dual mandate in that sense, and that's tough to focus on both things at the same time. What's that book? The One Thing. If you try to catch two rabbits, you'll catch none. That's like some saying in the book. So anyway, good deal. Okay, so you guys obviously pivoted a little bit, went to the remote, looked at the storage space, said, hey, there's an opportunity within this space to offer remote management for third party facility for owners. How did you get your first one?
Yeah. We had an owner reach out to us just that we knew from our personal network, who had a office building where he sort of did his own like local locker. He tried to build his own individual one-off sort of small self-storage facility using unused space. And what we sort of know from that is the economics that one, as a office property manager and owner, it's a completely different business, right? It's a consumer facing business. You got to chase people down. They call a phone number the way that an office tenant never would. And so he came to us and was like, this isn't working for me. Do you guys think you could manage this for me? Um, and that is really, we were already thinking about it, and it provided a good sort of test case for, let's see if we've got the chops to do this. And at the same time, we were looking at some deals where in new markets where we wanted to do conversions, but where we weren't really confident that we wanted to pay for the bill. Like we weren't super confident the demand. We thought it'd be a good product. Definitely was going to be no other use for space. Landlord wanted to try it, and we sort of came up with a sort of hybrid structure where we used our local locker brand. The landlord paid for the build out, owns the space, and we manage on the same fee contract that we manage for a traditional self-storage facility. So
Okay.
it was kind of a couple things were going on at once that didn't, don't want to say forced our hand, but encouraged us that it was something that was worth doing. And then as soon as we got in, we saw that it made all the sense in the world.
So then going from 0 to 1 is obviously a hurdle sometimes. So you got there. Did you just start making calls to get this next one and the next one? Because you guys have scaled to 90 in a short period of time. It gets a little bit easier as you get more under the belt, but how did you get to the second and third? What did that look like?
Trade shows, just showing up. We didn't have a sales team really. It was through our, just kind of word of mouth and trying to get the word out. We wanted to do a few, and we didn't want to sort of overwhelm ourselves in case there was some use case that didn't work for us. And once we had, 10 facilities that we were managing, we sort of decided, all right, let's build a team here and chase this. And that started end of last year. We started assembling the team sort of end of last year, and now we're adding 10 stores a month.
That's awesome, man. So talk to me about, I'm still curious about the story a little bit more. Are you guys private equity backed? Like or is it just all bootstrap? Like what does that look like as far as the funding and capitalization of everything?
Yeah, we have some investors, but a little more sort of some hybrid of investors and bootstrap. We're not like on doing the the clutter thing of raising a few $100 million in equity to say we'll be worth $10 million in a few
Yeah.
years. So
Yeah.
raising some outside capital has allowed us expedite some of the things we want to do around. We have an engineer, a computer engineer on our team. That requires a lot of scale to do. But while you're scaling, you're really wanting that, engineer. So you either sort of wait and you can't make the product improvements you want when you need them, or you can raise some outside capital and pull some of that stuff forward. Because like
Yeah.
ultimately we want to get to the point where we can sort of provide the same level of sort of service, but also product data analysis that, say Extra Space does, right? Um, but then if you look at the size of Extra Space's team, right, that, and so you got to bridge that gap.
It's a little different animal.
It's a
Yeah.
different animal. And go ahead. One of the other things that was a piece of that is as we were building our own product and then we started managing for other people, like these are small stores, or at least the original sort of cohort that we managed were small stores. We're now managing some bigger stuff as well. But there's so many software products and tools in the market that you need to use to piece together the tech stack to manage a self-storage facility. And if we are trying, these management fees are not huge for big buildings or small buildings. They're just not large dollar value in relation to the NOI or the revenue of the building. And the tech starts to add up to be a meaningful piece, if not, you can either think of it as a piece of the fee or separate from the fee, and sometimes equal depending on how big the facility is. So Alex mentioned we have an engineer. We started saying, all right, which are these tools? We should just start building our own tools. Leverage, we don't want to be a software provider, but we can develop some software that, one, allows us to do our job better, and two, allows us to strip costs out that we can pass along in the form of savings to owners, which is, again, a differentiator. And we want to make money on our management fee. We don't, we love being able to go to people and say, look, you don't need to pay $500 a month for a website anymore because we've developed a website. We have our own website, and it's a de minimis cost for us to maintain it. All of the cost was one-time expenditure to develop it, and then a little bit of maintenance. But across all of our facilities, it's not much. Same thing with we built our own pricing tool. So going back to you mentioned tips and tricks here. It is important to think about the choices you make when you're kind of putting that stack together, because the stuff adds, like, just map out everything you're going to need, because it really adds up. And we've tried to do that on our side on behalf of our clients so that they don't have to go and figure out, all right, which software do I need? Okay, now which access control, or which one, all these fees kind of surprise you. Is there a recurring access control fee? Revenue management, how am I going to do that? It's all, there's a million products.
Yeah, I'm curious. So, talk real quick about that. Like, if someone were to, well, back up for a quick second. What does somebody need to manage remotely? And then what do you guys offer, in terms of savings? So make that like contrast between the two.
Yeah, definitely. So and taking a little step back on that, like particularly when we work with a lot of first-time investors, and uh, they'll be acquiring their first facility. Maybe a broker put together a pro forma. There's always a missing piece of, like, often who's actually doing the work. Because, that there's some real estate asset class where it's reasonable to assume that the owner can actually do the work, right? If you have 3 residential buildings, apartments, like, you can self-manage that. It's easier, maybe that costs you $1 million to purchase. If you purchase $1 million self-storage facility, the amount of work required to operate it at all, let alone operate it effectively, is always way more, I think, than people budget for. You're dealing with 100 tenants. You need to find new customers each month, right? But you're not signing a 1-year lease on a residential, and then just doing a lease renewal. So in order to, manage something, and I'll get to the sort of tech stack and what you need, but you're going to need it. Who's doing the work? Is it me, or is it a third party manager? And am I accounting for this when I'm purchasing the asset? we often see sort of a gap in that analysis. But then in terms of how to sort of third party manage, so like this is sort of tied in. You need someone to answer the phone, and ideally you're answering the phone, 60, 70 hours a week. You certainly need a website that allows online booking. You certainly need sort of a delinquency and pricing playbook. It is a best practice also then to automate everything, right? So you need a gate that's integrated to your software. You need cameras. You need you're not going to have a person there, so you need to build out the tools and invest in the technology to close some of that gap with not having someone there 40 hours a week. Yeah, security is a big piece. Like at the very least, you need some way to restrict and then also distribute access. And there are a lot of ways you could do that. You definitely want a fence, but if you wanted to be play it loose and probably reduced upfront investment on an asset, because we have seen this, you at the very least need some sort of locks that work with your software, like a DaVinci or a KISS lock, because you just don't want open units. And if you have just typical cylinder or pad locks on units, when somebody signs up, you're just going to create a ton of labor and headache for yourself if you need to go let them in. And so you need some way to distribute access. You probably should have both cameras, a gate, and overlock, but you need at least one of those things.
Yeah. So in other words, if somebody rents a unit online and they want to go access their unit, and you're not there to let them in to take off your lock because you've, as the owner, have secured the unit with a lock, presumably, then now you have a problem because you always have to show up for these folks. Whereas if you use an electronic lock, DaVinci lock, whatever, they can access it themselves. That's what you're saying. And you don't have to be there.
Yeah, because there's a serial number, just for people who aren't familiar with that product. There's a serial number on the back of the lock. That serial number corresponds with a code in your software. And when somebody books that unit, the software will send the code that is unique to that lock on the door when a tenant moves in. Now, you could get really sort of analog with it and go and have a Dropbox and have a static code, have somebody go there once a week and change the code and put new locks in. But that's also a lot of work when a couple $1,000 to put those locks on site.
Yeah, so you need obviously security, gate, fence. Some places don't have a fence, but ideally gate, fence, cameras. Those are super important, at least to deter a bit, and then obviously try and catch somebody if they're in the active, or to show the police later on if they try to steal something. But a way to rent online. So you got guys. There's so many so many storage facilities that don't have a simple website where you can actually rent a unit online. So being able to do that, and then be able to collect some delinquency. If people don't pay, text them, some sort of messaging thing, and then you got to be able to answer the phone. So whether it's you or a call center or something like that, somebody needs to be able to pick up the phone, answer customer questions. And if there's a problem, something happens, there's a leak, customer calls, they need to let somebody know that there's an issue at the facility. So I think that's pretty much, I might be missing something. Are we missing anything, or is that pretty much?
Yeah, I mean, there's sort of like there's what you need, sort of bare minimum operationally, and then what you need to be successful.
You get fancy with it. Yeah, you can get like individual door alarms, and I've always thought there may be some value to that, but we never had those. So, but you can do other things. So I think that's at a bare minimum. So then, what do you guys? We could be missing something, but whatever. What do you guys offer? Because you did mention you've built the website, you've done a few other things. Like, how does it differentiate? How do you guys differentiate yourself from maybe, honestly, like a Copper or Atomic Storage Group or whoever the heck else is going to be managing remotely? Like, what's the difference?
And we're not owners, so we haven't worked with these groups. So I can't say, specifically how they are or how they are not.
Yeah. So disclaimer, if you're listening, we're not trying to put anybody down or disparage anybody. We're just trying to say, hey, it's a business.
Yeah.
Here's how we run our business.
So, like, go ahead. Generally speaking, we enter the market with a lower price point. Because of some of the technology advanced things we've implemented, so lower product development. So if you have a 100-unit facility, it's not that Atomic or Copper won't manage it. It's just that their fee structure really eats up a lot of the NOI and often makes it cost prohibitive. So that's sort of one thing, is competing. We're able to compete a little bit more on price. And for a lot of first-time investors, first time acquirers. People are starting small, right? Most people are acquiring a 600 unit facility on their first one, where there's a lot of managers whose economic model works. Mm. I would say that is the biggest thing. The other thing, and I think, wait, let me talk numbers with that,
Sure.
with a couple examples. So, specifically speaking of a couple of the tools that we built that strip costs out and what those dollar amounts are. When you have a facility, you have the website and the software. The website is the thing. You go to Google Maps and click website. That's the front end. And then as soon as you go through the booking flow, the software, connects with the website uh, during the booking flow. And once you have paid for your unit, sign your lease, the software takes over. Often it takes over during that booking flow, and those can either be the same product or different products. We decided we built our own, people call them FMS or PMSs, property management software, facility management software. We built our own facility management software for our stores. We learned some hard lessons while doing that because we're not, we're building it for us, not for others. But what we realized is the website's not easy, but it's not the most, it's a product that we think gets really marked up, and can be expensive. It can be the cheapest website you could find, might be like a U-Haul website for a little bit less than $100 a month. And websites can go all the way up to $750 for the full sort of SEO. We have built in our own SEO. We've thought about the architecture for page speed. We've looked hard at booking flow, streamline. We took over the booking process, which usually you can't do. We did that by tying into the API with Store Edge, and so we think we have a website that competes with the high end of the market, but we provide it for free. Similarly, pricing. There are tools like Veritag that will scrape competitor pricing. How do you run comps? When you're trying to determine your street rate, it's about quality, at proximity, and then the rates among those things. So, I'm kind of back to Alex's point. Apartment rents, because people sign up for 1-year contracts, they don't move that frequently. Storage rents can move every day. We don't change rates every day, but we change them frequently. It's hard to, especially for small facilities, don't get a ton of volume. You need to let the rate sit to understand if it is a rate that'll sell. But we use the Store Track API, which is way cheaper if you could build software on top of it than using just Store Track as a tool to pull comps. We determine a set of comps, and it's variable facilities. So we're looking at what are the 5 to 6 facilities within a 2 to 3 mile radius that we think are most similar to ours and that people might compare us to for price. And then we pull that API, we call the API, and we understand what the prices are. We determine a weighted street, and then we determine what we want to be in relation to that weighted street based on our own occupancy, our leasing velocity, those things. So you're saving per facility. That's de minimis cost to us. Costs a bunch of money to, in engineering costs to like build all that stuff. But now we just pay for the API for each facility. It's a couple bucks a month, and we capture some of our costs in our fee, but you're then no longer paying $150 a month for Veritech. So that's just another example of something that we built. And then we also, it's not a black box. We can mess around with the formula. We can mess around with how we determine what we think the weighted, the street rate is. We don't have to let some software determine for us what the street is. We can dig into the numbers. So those are two sort of examples that strip out close to $1,000 in costs right there. And a lot of these facilities that we manage for don't even generate, they're generating $10,000 a month sometimes on the small side. And that's 10% of your revenue right there.
Yeah, it could be meaningful. Yeah, it could be very meaningful. How do you guys, so having gone through, we've used a couple of third-party management companies in the past. I learned some hard lessons going through some, tough times in 2023, 2022 with interest rates and things kind of slowing down. And you realize, hey, it's really important to drive. If I think about acquisitions or just development, looking for sites, whatever, you have a deal flow like funnel where you get a bunch of different leads, stuff from brokers, whatever. And then they filter through, you underwrite some, they work, some don't. You make offers on some, hopefully some get accepted, and then you close some. So you have like a closing ratio. In management as well, like you have leads that come in, maybe somebody calls the call center or whatever. they visit your website, and then, that's like, it's a customer funnel, sales funnel. How do you guys drive that top of funnel, um, like I should say, just the customer interest or whatever you want to call it, that top of funnel where it's a bunch of leads, that's to me really important because if you have a closing ratio, I don't know what the number might be, 25% or whatever, people who visit your website end up renting from you, whatever that number looks like. Um, if you expand the number of people looking, then obviously the theory would be that you would close more rentals. So just driving that top of funnel. I know that's market dependent. You can't make magic work everywhere with every location and every facility. Totally get that. But just in general, you had mentioned some stuff that you guys do online, Google Maps, et cetera. But do you guys do SEO? Do you guys do pay-per-click ads? How do you guys actually drive customers to the website to be able to rent a unit?
Yes. And this is where we spend a lot of our time, always trying to find the best possible strategy. So like, we have a dedicated marketing team who's working on this, because that is arguably the most important thing you could do for your asset, just getting eyeballs on it. It is sort of hard to expand demand in storage, right? People kind of either need it or they don't. So the demand
Yeah.
is there. So now how do you capture it? So the probably most important thing is SEO ranking. But it's fairly complicated. It's not the tremendous amount of sort of day-to-day work, but you just really need to understand SEO infrastructure and set your websites up correctly. And then tied into that is like the Google My Business listings. A lot of people will go on their phone, type in self-storage near me and look at the pins. What sort of pops up first and most prominently? That's a product of a few things: how many clicks you get, website speed, where your tags are, number of reviews, and Google's always changing their algorithm. So it's not realistic to expect a sole proprietor storage owner to be able to stay on top of it. With scale, we can have a team who can. Once you get the leads or, the eyeballs, now the name of the game is not losing them, right? So that is one, having a really, easy to book website where you're not creating needless friction. We do some things that very few other like operators do or managers where if you're coming through it and booking a unit with us, the first thing we ask is name, email. Once someone puts in their email, we now have that sort of data. If they abandon their cart, they decide they don't want to book, they go price shop somewhere else, we can sort of retarget them with some emails saying, hey, thank you for considering us. Come back and book. We'll give you 25% off your first month. And that moves the needle a little bit. And then if someone gets to your website and makes a phone call, it's now getting them in your sort of your CRM. So you're following up on the leads. You're having, the right sales strategy and training for your managers and your customer service associates. So they're converting that lead into an actual booking.
That's good that you guys have like thought through the process because you mentioned, hey, the abandoned cart situation. Most people don't think about that. They would get to the website, or they might have as an owner, you have your website set up, and especially with storage, like they've only recently, I think, allowed you to kind of see or access that information or something to that effect. I remember we ran into that issue. We're like, okay, we lose, like we don't know what's happening. Somebody like clicks reserve a unit, or I forget which one it was, but like reserve a unit, let's say. They click on it, and then you don't know what happened. Like they didn't reserve it, but they clicked on it. Where'd they go? Like what happened? How do we retarget those people? Well, we can't. Well, that's stupid. So because you got to fix that. That's part of your funnel. Like if I'm looking at deals and I'm trying to close a deal, and I know I have a target of closing X number per quarter or whatever the number is, however you measure that. Well, if I can't figure out like that funnel, that flow, I'm like in the dark on it. Like, okay, I don't know. I can't tell you anything. So I learned some hard lessons myself through that process. And one of them was like anybody can literally get the gate fixed, or we could go fix the gate, right? We can call a third party vendor to fix something or call the police if there's a break in. Anybody can do that. But a third party management company needs to drive revenue. So it's good that you guys are actually thinking through that process. But I think somebody was going to say something. I didn't mean to jump in there.
Talk about tools, specifically about tools to generate demand. But that is why just to close that out, that's why we built
Yeah.
our own booking flow. Like we only had a website to start, and then the booking flow is still storages. and it took us a while, but we were like, we just need to own this so we can tag it and look where people drop off. And then the phase after that was now we need to ping them when they do and try to
Yeah.
recapture those leads. So that was
Yeah.
something we rolled out this year. But
Good.
to tool, you specifically mentioned PPC and Google Maps. I mean, there's, in my mind, there's sort of the big four: signage, Google Maps, Sparefoot, and paid PPC at Google Ads. Those are you need to do those four things well. And then there are some other things that will not be, I don't think, the biggest needle movers, but you have to live off those four things. I mean, good signage, and you can't control where your facility is other than when on the buy. But you have prominent location, you need to have good signage with good calls to action. It's not just the signage itself; it's the calls to action.
Yeah.
Same thing with
Yes.
Google's. Like, is your information correct? It's not all obvious, even something as simple as, like, there's sort of like two little tricks with Google Maps. One is getting the pin set up. Like, do that as early in your first facility or your purchase process as getting the pin size set up requires a verification, which often requires either a video or sending a postcard to the facility,
Yeah.
and then you're dealing with sort of Google's contractors. So it can end up taking weeks or months. Sometimes even if you know exactly what. And then once you do, Google won't really respect you until you have like 4 or 5 reviews. So you need to get reviews as quickly as possible to show up when people search. I mean, you're not having people be able to see the pin on your map, on the Google map, is the same thing as not having a sign at your facility.
Yeah.
People won't even know that you're there. And if you have 0 reviews, maybe if somebody even gets to your page when you do have 0 reviews, not having any reviews also does not lend legitimacy to the business. Like, it's unclear if it's open. Is the store open? Is it shut down? Is it real? Because there is such a thing. Like, people, it's hard. They're weeding it out a little bit more, but a lot of companies will drop fake pins around on maps to generate leads in their area. So
Yeah.
these are just like
Yeah.
things you need to think through. And we just like you, we've learned things the hard way. Pins first, having it being open without a pin. You do that once and you realize it's a problem.
Like, wait a second. Right. Wait a second. How do you guys capture reviews from customers?
The most important time to do that is on the move in, because can often be the happiest that a storage customer might ever be. Especially when you're like, a lot of times we are coming in and we're working with, God, maybe more than 50% of our clients are like new, or not new owners, but owning new facilities. We're coming in at a point in time of a close or a transition from one owner to another. And in that case, there's just always, if you transfer your software, you're rolling out insurance, if you're doing price increases, people are just unhappy. Like, just finding when you're reminded of your storage unit, you're just going to be like unhappy.
Super mad. Yes.
Yeah. Usually
100%.
you're not
Yeah.
ever reaching out to a tenant to tell them that they're going to start paying less.
Bro, you never reach out to a tenant unless you tell them you're going to start paying more, right? That you never, or your door is left open or something, something like
It's
that.
bad.
It's,
Yeah.
it's a pain in the butt, and you don't want to disturb people. Yeah, go ahead.
Like, reviews have serious economic value for an owner, right? So there are sort of opportunities if you are helping out a tenant, or they're saying, hey, I have some hardship, or can you waive this fee? Maybe barter a little bit, and finding those opportunities where, okay, we'll do this for you. We'll make an exception, but you could please leave us a review.
But you cannot
Yeah, those
solicit.
things are
You cannot solicit. Google, you cannot solicit. You can't pay for reviews. That's a really good way to get your pin taken down. You just want to, you need to check. You don't want that. We're not telling you to pay for reviews. Do not do that.
No.
But
You just
when
ask.
yeah,
Say,
when
"Hey, can
you
just leave us
ask,
a review?"
When you've done them a
Yeah.
favor, when they're happy, that's
Yeah.
when you ask. You don't ask when they're there.
Yeah, we don't tell them, hey, leave us a 5-star. Say something like, hey,
Yeah.
can you just leave us a review? That we really appreciate it. Absolutely nothing wrong with that.
And that's part of the training process for anyone that is working for us,
Exactly,
is like, you
yes.
just got to identify the opportunities when you're working with a happy customer and just try to get them to write a review.
Yeah, Atomic, when we use them, they did a fantastic job in capturing reviews and just helping boost some of those things because we had some reviews. I call it the death spiral, like the downward death spiral. When you start getting bad reviews and then your responses to the reviews are written from someone overseas and it's kind of canned, because you have a call center or whatever, it looks really bad. And like now you have this death spiral at your facility because it's really hard to bury those bad reviews if you don't have enough good ones out there. I never want to see all 5-star, um, like it's okay to have 4 point something because somebody's going to mess up something at some point, get mad. You can't please everybody. That's fine. But at least try to, respond to every review, catch reviews, respond to every review, try to help the customer as much as possible. I have an idea for you guys. So you ever like sign up for those newsletters? Like we're all on social media or out there trying to whatever. And you like, for example, like Justin Welsh. Have you guys ever heard of Justin Welsh? Okay, he's on LinkedIn. He's one of the like top users of LinkedIn. If you go to his profile, he has like I don't know how many followers. Every single post gets like thousands of likes and comments and all this stuff. Great guy. If you go to his website, he just teaches you how to grow your personal brand. So I've looked at his stuff and then you kind of go down the rabbit hole of that and you realize, oh, there's a lot of people out there that help you. Whatever it is you're trying to do, they help you. But whenever you sign up for their newsletter, they will give you social proof immediately. So they will say, like for Justin Welsh, I don't know what the number is, but it'll say join 300,000 other entrepreneurs every Saturday and receive. He has this newsletter called the Saturday Solopreneur because he teaches people how to build like a one-man business, basically. And so there's always social proof. If you go to somebody else's who's in that kind of similar space or whatever, they always say join 35,000 other investors every Saturday reading the newsletter. I've always thought on a storage facility, let's say there's 50 units, and you're like 30%, or I'm sorry, you're like 90% occupied, whatever it is, you can make it up, whatever it is. I'm not saying lie, but just make up a easy to understand number. And you say join, if it's 100 units, you say join 90 other customers at our facility. Like giving some sort of like social proof. It's a very small thing. We're on a podcast, obviously, but I could share my screen and show you what I'm talking about. But it helps you know, like, oh, there's actually other people here. There's other customers. So you can see the reviews, of course, but like knowing, oh, like if we had a 700 unit facility and we had 600 units occupied, I would say, and we keep that number pretty steady. It might go up and down, but I would say join 600 other tenants, happy customers at our location. Right by the rent now button or somewhere on that website when you on the hero image or somewhere in there, because it gives a little extra social proof. I've mentioned that to other people, but they don't ever, it is what it is. It's a small thing. It's not a big thing. So take it for what you will, since you guys run your own website.
Yeah, we could buy. Would you roll that?
That's definitely a good idea. In particular, I think it might lend itself better actually to like your kind of your smaller facilities too.
Yeah,
If
I
it's
think so.
join 3,000
small
people,
thing.
just
Yeah.
join 100 of your fellow community members.
Exactly. Join 100 neighbors renting at our facility. Like that sounds great to me, then that's in itself, that's not going to sell anything, but then you add the components together of that clean website, easy to rent, social proof of the customer reviews, some other things there. And it kind of, okay, I have some confidence in renting from these guys. It all adds together.
Yeah. You just got me thinking about another idea. And like, not like thinking about the funnel and like, how can we capture information? Yeah. Getting information. It's easiest to capture a lead if you get the lead's information and then you can follow up with that. That is where conversion rate.
Yeah, even in your follow-up, you could say the same thing.
Yeah.
Hey, 25% off, join 100 other customers or happy tenants at our location.
Yeah.
That's easy to put in that follow-up email.
Yeah.
A little bit of social proof in there. And then like maybe, I don't know if you can get granular with this, but like have one like 5-star review with one little snippet in there and a picture of a person who left a review, whatever. Anyway, just my thought. I'll join the team happily and help you guys.
Yeah. Okay. I want
to scale up. Anyway. Yeah, man. Let's go ahead and wrap everything up with the final 4 questions. It's been super helpful. I like the story that you guys have. I like the vision and everything. I wouldn't be surprised if you guys grow, 2 times as much, 3 times as much, hopefully in 2025. And then maybe add that other vertical. We won't talk about it now, but we'll add the other vertical of raising some capital and buying some of these deals. I think that would be amazing. It makes a ton of sense to me. But if that's not the plan, it's not the plan. So let's get to the final 4, guys. Talk real quick about a high point in your guys' career or partnership, and what did you learn from that experience?
I think we probably have different high points. My high point, I think, would be sort of opening our first local locker location and successfully filling it up. First time, you're anxious, you're a little scared, you could fail, and just not doing that. It's much nicer than the alternative.
Yeah, we did
Absolutely.
used to joke. We were like, what if we never get one customer? Like that would be so embarrassing. It's just like everyone thinks it's a stupid idea. Like we would have to go into hiding.
That would suck.
It would suck.
It's not the end of the world though, because then now you've gotten feedback from the market, and you got to pivot a little bit. So it's
Yeah,
okay.
that's
actually.
okay. Yeah, mine is probably similar to that. Like we weren't we needed to get some sort of external validation for this idea. And so we did some pitch competitions in business school, and in one of the competitions we came in second place, and we got one of those big golf checks. And it was like
Nice.
it was enough
Yeah.
for us to. Alex actually he had accepted an offer to go back into consulting.
Oh, nice.
That's we got enough momentum during school where we both sort of just we were like, we just have to see this through. And so that was,
Yeah.
just like these incremental things that pushed us along the way. And then, it was kind of, once we opened our first facility and decided we didn't have to, go into hiding when we got some customers, we were fully into it.
That's fine. Did you guys get, was it undergrad or grad, like MBA
MBA.
at Harvard? MBA, okay, got it. So, yeah, so you hopefully make this work, because you can't go back at your MBA and pivot.
No, it's too late.
That's what a lot of people do.
We did our pivot. We're storage
You already did
warriors
that.
now. Yeah.
So you used up that one.
Yeah.
Yes. So,
Maybe they'll have
so
us back.
anyway. Yeah, exactly. What, just out of curiosity, what consulting firm?
Boston Consulting Group.
Oh, yeah, yeah, there you
BCG,
go. I like
yeah.
that, man. BCG, there you go. Good deal. All right, so what was a low point in your guys' career? What did you learn from that experience? Because often we learn from the low points more than we do the high.
Well, when we just started, it was just Pete and I doing everything. So I guess having to just work with Pete every day, with no variety. Spend more time with him
We used to be friends.
Yeah.
than anyone else.
Yeah.
No,
awesome.
low point. There's not. I don't have one specific moment, but when we were doing local locker, we were that's closer to being owners. Now we've sort of pivoted to client service, and I am from the client service world prior to storage. So we don't, as managers, do everything perfectly. Well, sometimes we ask for feedback. Sometimes we'll just get feedback, and when we have fallen short of our clients' expectations, that sort of stings a little bit. That's part of the process. It will happen, but you never feel good about that.
No.
Yeah.
Yeah, that sucks. Same thing to a lesser extent on we used to answer the phones for local locker, and getting negative feedback or just having somebody kind of tell you all the reasons that you're doing a bad job is tough. And if you care about we have to care about our business, like it's our livelihood here. So it's just like, it's motivating, but it is, you dwell on it when it happens.
Yeah, that can be pretty tough sometimes, but it helps you learn, right? And you can pivot, and you can not pivot, but you would add and fix those problems, add some new services or whatever it is. So it can be very valuable if you're willing to listen to it. So it's very good. What's a good business resource that you guys recommend for the listeners? It could be a book, podcast, conference, doesn't matter. What would you recommend?
Oh man, I would say, for me, I think this would work with your listener base, but the conferences are really helpful, and not when you go to the self-storage conference, a lot of times it's the same thing. If you're just going and listening to the panels, because it's the same people who are traveling around to these things. Usually they might be trying to sell something. You've got, like, Scott Zucker is the sort of legal authority in the self-storage world. He's usually speaking at every other conference. If you've seen him speak recently, you'll probably see what he says the next time. But talking to Scott, like having an opportunity to just interact with him or anybody else in the industry at those conferences is hugely helpful, because they'll say, hey, go stop by that booth. Like, there's a pretty cool product over there. Or I don't know, like, I don't know how they're talking about conversion. Like 60% conversion sounds high. Like how high in the funnel are we talking about here? And you just start to like look at your own KPIs and think through, learn a lot from other people in the industry. If you haven't been to a conference, the panels are also very helpful as well. If you're just traveling to these things all the time, you might see the same thing twice. That would be what I'd say if you're either in the industry or joining the industry.
And outside of your podcast, I would rank one. I like just finding reading a book about an industry or some founder, unrelated, who's had success, and then finding one thing that we can try and apply to our business or personal life or job. I found that very helpful.
Yeah, I think it's a good one. I just picked up, I just started reading the Elon book like last week, I think it was. So that was actually really interesting to read about his childhood and all that. He just got it. I just finished the story of him selling their first company for like, he got like $15 million or something like that.
Yeah, I love
Uh,
Walter Isaacson. I read that book as
yeah,
soon as it
exactly.
came
Yeah, yeah.
out,
And the
and
Steve Jobs one previously, that was a really good one too. I enjoyed that one.
Well,
Yeah, very
Alex is
good.
a big he reads a book a month, and
I read more than a book a month.
I always
Oh my
know
gosh.
I always know when he's finished because then I get to hear he comes in.
You get to
He
hear
needs
about
to,
the story.
well, he needs to of course tell me that he's read another book, right?
Yeah,
That
Well, that's
makes him
good.
feel good about himself, and then
it's part of
Yeah.
it.
and then he's got I can tell when he's trying something new out. It is. I don't have to read the book, and I still benefit from it. Like I'm
There
gonna
you
hear the
go.
key takeaway.
You guys should listen to the Acquired podcast. You ever heard of it? Acquired? It's
No.
not about real estate. It's they sit down, they do like it's like a 3 or 4 hour long form episode. They do one a month. And they either interview or tell a story about a founder. So they do like Nike and Tesla and some other ones, but the most recent one they did, I think they interviewed Mark Zuckerberg at some event, and then they also did the Howard Schultz, is it Howard Schultz, the founder of Starbucks. That was a very interesting interview. So I like coffee, so that was a good one. But anyway, the point is that it's in depth about something or someone in business. So if you can't read or didn't have time or whatever, it's nice to listen to the podcast. It's really good. It's actually the number one, I think, business podcast in the world.
Okay, let's
If I'm
check
not
that out.
mistaken. Yeah, guys, I try to get sponsors for mine. They get $750,000 per quarter to sponsor their podcast. They have a partnership with JP Morgan. What the heck? I need to scale up, bro.
Yeah,
I need
that's
to
high
get there.
That's high margin for just
That sounds
Bro,
pretty.
I mean, it's so simple. It's not hard at all. The best type, I know that we're getting off track here. We'll wrap it up, but the best podcasts are the ones in person. I've done 2 of those. So if the 3 of us were local, we would be sitting down and doing this because
Yeah.
they're so much better. And that's why some of those guys, I know there's other reasons too, but that's one of the reasons why some of the big names out there have a lot of success because a sit down interview is so much better than doing it over the screen. But you got to work with what you got.
You didn't
So,
invite
guys,
us. We come next time.
Okay, we'll do it, man. All right, guys. How can listeners get in touch with you if they want to inquire about third-party management, or if they just want to bug you with questions? How can they reach out?
Yeah, easiest way is just visit our website, whitelabelstorage.com. And there, there's a form you can click out and hit submit. And then Pete and I are very involved with the business. So just let us know you heard us on the podcast, and we'll personally reach out and schedule a call. Neither of us are big social media people, so I don't have an Instagram handle or LinkedIn. I have a LinkedIn profile, but I'm not active on it, so it's hard to find me on those places.
Awesome, great.
Our marketing director is not a fan of that though. Because she's a little more engaged.
I was going to say, yeah.
It's a missed opportunity, that's for sure.
All right, guys. Thank you guys for being on the show. Appreciate it. My best wishes. Hope you guys grow to leaps and bounds in 2025.